What I think is actually likely is I think there has been chasing going on, just in terms of short covering. People have had to give in, and the number of liquidated shorts this year is an all-time record. It's never been higher. So all that quote unquote cash on the sidelines, I think a lot of it is back.
In the fast-paced world of finance and investing, predictions by experts and central banks often dominate headlines. However, Mark Yusko points out, these predictions can be far from accurate. In this volatile landscape, Bitcoin and other cryptocurrencies have gained prominence as primary investment options. And while traditional financial markets struggle with predictions, the crypto market has seen remarkable growth and interest. Investors are drawn to Bitcoin, which operates independently of government influence and monetary policies, and makes it an appealing hedge against inflation and economic uncertainty. On Monday, the crypto market saw a mixed performance, with Bitcoin and other top crypto tokens trading in a sideways pattern, contributing to this phase of consolidation. Bitcoin still remains below the $29,500 mark, while Ethereum, the second largest crypto token, is also following a similar trend, registering gains and holding firm around the $1,850 mark. With Bitcoin's value fluctuating between $29,000 to $29,500, crypto market analysts predict a stability in the coming days that will push the price over the $30,000 mark and will hold above that trading line, leading to a massive rally in the last part of the year. Let's get into the latest interview with Mark Yusko, where he shares his compelling insights on Bitcoin, investing, and the intriguing state of the financial markets. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
I will make one caveat. You know that the FOMC, right, which is not just one guy or gal, but it's, hundreds of very highly educated PhDs, on paper, very, very smart, right? And they've been predicting those two things, GDP and inflation, for dozens and dozens of years. Right? Here's the crazy stat. This is a crazy stat. They are 0 on those predictions. Literally 0 for 286 or whatever it is on the quarterly. You could flip a coin and be right half the time. They're horrible at that. So his commitment to say, I don't see, not commitment, but him saying, I don't see any more rate hikes, I'll take that as signal. Him saying no recession and inflation not coming down, noise, right? This is a guy who said inflation is transitory when it was 2% last time, on its way to 7. And now that it's fallen from 7 to 3 and probably heading for sub 2, probably even, I don't know that we'll get all the way back to deflation, but there are some things that are looking pretty ugly. So I don't take his proclamations there with that much seriousness. And I really am struggling here because the stuff I see with my eyes, the anecdotal evidence, full restaurants on vacation, full airports, Taylor Swift grossing $1 billion on this tour. The estimates are that she's going to gross $1 billion and set the all-time record. So when you look at that anecdotal stuff, it's like, wow. But when you look at other stuff like credit card debt, multiple expansion, stocks have not gone up because things got better. They didn't go up because earnings went up. They didn't go up because they went up because the multiple went up like a lot. I mean, Amazon is selling at over 300 times earnings. NVIDIA is over 200 times earnings. Well, the 300 is actually unprecedented. The 200, we had that with Cisco in 2000, but 300, I didn't know what to say. Higher Fed funds actually makes banks more profitable. So, and if banks are more profitable, they can buy more stocks on their balance sheet, even though they're not supposed to, but they do. So that helps with the Ponzi of higher stock prices through multiple expansion. But the point is really, really well taken in that not only is the government fiscal spending really high, and particularly high in the defense sector, shall we say, that just turns out a lot of our congressmen and senators own stock in these companies that are they're voting to give money to Ukraine, who then gives it back to U.S. defense companies. In fact, I think it was Mitch McConnell said, you shouldn't worry about us giving money to Ukraine because it's coming right back. That's money laundering. That's not good, Mitch. Don't admit that out loud. But he did. And so that's real, right? That is real government stimulus, because those are American companies with American jobs, and people then go out and buy Taylor Swift tickets for $253 on average. But the other piece of it that's gotten lost is M2 ticked up. It ain't going down anymore. No more reducing the balance sheet. The whole, hey, we're going to reduce the balance sheet, quantitative tightening. You haven't heard the word quantitative tightening in months. No one's talking about it because M2 went like this. The bailout of SVB and the bailout of other banks. And look, banks are still failing, but the bottom line is monetary policy is actually expansionary, not contractionary, despite the rhetoric. And so I think those two things, and I think the monetary is important, but I think the fiscal is what's really being lost. 2 trillion is a lot of money. Again, anecdotal evidence says, yes, there is a chasing that occurs. Now normally it's late, like Q4, and that's part of the explanation of Santa Claus rallies, and also around the issue that mutual funds have to sell by October 31st. It's not December 31st. And so there is this downward pressure in mid-October. And then you get this, 30 days later, to avoid the wash sale, you get this increase. And then you couple that with a chase year. And that's why you get these big blow-off rallies sometimes in Q4. One of the things about summer is people go away. Like literally. I mean, you went away, I went away, people go away. And therefore less happens, volumes drop, and you've seen that in the stock market. And you get prone to squeezes. And so, the NVIDIA thing happened, and seen it a couple times with other companies that quote unquote made earnings, which we'll talk about in a second. I'm like, no, you didn't make earnings. You told me you're going to make $1. Then you told me you're going to make 50 cents. Then you told me you're going to make a dime, and you made 11 cents, and you call it a beat. That's not a beat. I mean, you told me you were going to make $1 not that long ago. But the street thinks it's a beat, and because there's no one in their seats, you get a big squeeze, and they happen. So what I think is actually likely is, I think there has been chasing going on, just in terms of short covering. People have had to give in, and the number of liquidated shorts this year is an all-time record. It's never been higher. So all that quote unquote cash on the sidelines, I think a lot of it is back in the market already. And yet I do agree with you that there's going to be some people that wake up here and they look and they say, geez, I'm 500 basis points behind. And in the institutional world, 500 basis points is a massive hole, because no one said we were going to be up 19% in the S&P this year. Not anybody.
Yusko remains skeptical of the Fed's recent statements and its handling of inflation. He points out that policymakers have repeatedly underestimated its impact and failed to provide accurate forecasts. Such inconsistency undermines investor confidence in traditional markets and fuels interest in alternative investments like cryptocurrencies. Yusko believes the inflated stock prices are also attributed to banks' increased profitability due to higher interest rates, despite regulations prohibiting them from stockpiling on their balance sheets. This scenario adds to the concern that markets may be overheated and due for a correction. With these major factors driving markets, Yusko says Q4 is the time we'll see even more rapid squeezes and price movements. What do you think about the latest interview with Mark Yusko? And do you think the Fed will actually drive more crypto adoption in the last part of 2023? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.